What's going on, everybody? This is Joseph from the UK.
Hey, this is Leigh from Australia.
And this is the Finance Matters podcast, right? Sharing financial information, financial literacy tools and skills to help you
have a better financial future.
Yeah, love that. Beautiful. Nicely said. And so today we're going to talk about, and just a bit of a first disclaimer. We are actually certified financial advisors, but this does not constitute as financial advice. We're just here trying to share our knowledge. So if you really want some financial information, go talk to a financial advisor in private. Okay. But today we're going to talk about the most important thing on the planet, which is
life insurance.
There's a lot of misconceptions about life.
Yeah, a lot of negativity around it. It's because I think people don't understand it. That's number one.
Yeah.
They think it's expensive. It doesn't have to be 3 to 5% of your income towards your life insurance. So maybe we talk about these negative assumptions a little bit. They come up and basically we'll just chat about what it's really there for. And I really just think a lot of people just don't understand it.
Right.
So it's easy to say no to something that you don't understand. Yeah. And sometimes there is a lot of information out there as well. It can be overwhelming.
Yep.
So even when you maybe decide that, okay, maybe I should look for some life insurance, there's so many insurance companies, banks, everything that do this, and it's very tough to find what's best suited for yourself. So this is actually where a financial advisor comes in to play it, because they can filter for you and find you something that suits you.
Makes sense. I remember that I used to have like a very negative feeling this word.
So I'd use that to the life insurance, right?
Yeah, for sure. Like I was kind of like, I didn't really know what it was, right? And then obviously people feel it's very negative because I only need the money if I die, for example. But there's actually a lot more to it than that. So like I was just being exposed to better information, maybe understand the real value of it, and not just like have a gut feeling, oh, no, I don't like it. I'm going to lose money. Yeah. You know what I mean? Kind of have like a cardiac arrest.
In the meantime, I think they have regrets.
Exactly. Because they can get covered for that. Exactly right. They'd be good for coming for it. Yeah. So, cool. So like, how'd you go about it? Like, what's been your experience talking with people about it? What would you say is kind of like the real value? Let's start over there. Like, where does the value?
So look, what I would say as well, which is hard for people to think about, is because it's not a nice topic, right?
Right.
You're talking about death and
injury,
and cancers and all these things that we can get covered for. So it's not the nicest topic, so it's easy to put it off. Look, there are many reasons to have life insurance because basically it's your security, your safety net, right? And unless you have millions and millions of crowns or something, whatever currency sitting somewhere, then you should have some life insurance, because the actual idea behind it is it's your safety net in case something happens to you, right? Because you have your lifestyle, right? You have your income, right?
Yep.
Your expenses are always adapted to your income. However, something happens to you, and we're not talking about death here. This is a worst case scenario, but something happens to you and prevents you from working, an accident or an illness or something. It can be weeks, it can be months, it can be years, right? This has a huge impact on your finances, because when you're on sick leave or whatever, your income is generally half.
Right, we used to.
People think it's always 60%. 60% sure if you're earning average income. But if you're someone earning 100,000 crowns a month, on your sick leave, the highest you'll get per month is around 40,000.
40,000. So imagine someone who's actually living quite frugally at 70% of his lifestyle. He's actually getting way less than what he needs to actually survive.
Yeah. So that's behind it is particularly people that have debts. But if you have a mortgage or loans or something, that's really important. People that don't have savings.
Right.
Because if something happens to you, you have no savings.
What's the first thing you're going to get into? Debt.
Yeah, exactly.
Credit card.
However, even if you do have savings, you end up spending all that savings if it's like a bad injury or you cannot work for some time.
Yeah.
So these are some of the things that life insurance can help support you. And as I said before, 3 to 5% of your income.
Yeah.
That's all. Right?
Yeah.
That's all you need for a good life insurance policy.
For sure. 3%, 5%.
Yeah.
Wow, incredible, right? You didn't know that. You wouldn't think that. You think it's so expensive or something crazy like that. But if you can't afford 3% of your income or 5% of your income, then you probably have other issues to worry about.
Yeah, most people spend that on a night out.
Yeah, that's crazy. Or in like one subscription, like Netflix here, Amazon Prime there, all this type of stuff, right? Okay. So then I also recognize, I think for me, one of the things I really valued about life insurance was if something unfortunate was to happen to me, I live in the Czech Republic, but of course the UK, right? Something unfortunate was to happen to me and I also pass away, then do I have my family, not only will they have to like worry about my death, but don't have to worry the financial needs of moving my body to back to the UK, then also doing the funeral costs, etc. Except I learned that life insurance helps to cover costs of repatriation, like you just said, and of course the burial and funeral arrangement that needs to be paid. So I'm actually removing that risk from my family. And like, I'm just being a good son, actually.
Yeah, you're being responsible.
Say I'm being a good son, right? No, my family don't need to worry about that if something happens to me, right? Of course, they can now remember my death and really celebrate my life, but at least they don't need to worry about the finances later to that.
And usually 9 times out of 10, a death in the family causes financial difficulties.
Right. And actually, finances are probably the worst thing to talk about with anybody, right? Because it gets very personal upfront. Oh, you're broke. Oh my gosh, you can't afford this. Oh, you never get this. It can be very toxic and very quickly. So it causes stress. It causes a lot of stress. So imagine when you're ill or you don't feel, okay, sorry, right? It's a bit dark, right? Today, I'm dark, but okay, whatever. Imagine something unfortunate is happening to you, right? I've had so many common stories of people, they're going through mental issues at work, right? They just don't like their job. They don't like working with the people. They don't even like whatever, right? And they're just really trying to get some time off so they can really work on their mental health, right? So maybe you get sick from it because obviously you have all that stress.
Yep.
Then, okay, so you take some sick leave. But then your income is half of what you used to have, but you need to still pay for your mortgage. Your expenses don't go down by 50%. You can't talk to your landlord and say, hey, Mr. Landlord lady, or whatever. Can I pay half because I'm not feeling well?
Yeah. Fine. Just go half.
Fine. Some just go half. No, they'll say pay or goodbye. There's no other way, right?
Yeah.
So this is where life insurance helps at least to cover this and plug those gaps, right? Especially you don't even need to, because it's not really that much of an emergency to even tap into your emergency fund.
No.
Right? But it's all you need to your savings for a bigger house that you want for your future. You don't need to sacrifice your future to survive in the present.
Yeah.
You actually have a policy or have something in your control, right, that is protecting you. So why use your money? Use other people's money. That's the whole term of a mortgage, right?
Yeah. Exactly. And maybe we'll go through and just explain some of the reasons or what you can get covered for, because you mentioned death, and this is of course the worst case scenario, and this is what actually most people think of life insurance.
Yeah.
Which is when there is no life, right?
Yeah, for sure.
And yeah, that's worst case scenario to help cover things like repatriation. If you have debts, it should be enough to cover the debts, so you're not leaving your family with debts to pay.
Yeah.
Imagine like in my case with a mortgage and a young child, imagine if my income wasn't there, then my wife, I don't know how she would be able to pay them all your work. So it's being responsible. This is the worst case scenario, that you get to also choose the beneficiary, so who you want the money to go to. Right. It can be several people. You can add it up 5 people or more sometimes. So that's one thing. There's invalidities, three levels here in Czech. There's 3 levels of invalidity, but it often means that actually how it works here in the social system, when you're on sick leave, if you're on sick leave for an extended period of time, anywhere between 6 and 12 months, the state will actually declare you invalid. And then instead of getting sick leave payments from the state, you go on to an invalid pension.
So you actually, the employer will stop paying you, and then the government's like,
our employer is only liable to pay the first 2 weeks.
Really?
Yeah, and then it's up to the state. And of course, most employers, that's what they do. They'll pay the first 2 weeks and then leave the rest to the state.
I see. So what happens, over time they're obligated to actually pay that 50% that you were talking about before?
Yeah, that's not coming from the state.
That's coming from the state, yeah. So they get what's the word? Recompensed? No, what's the word? Got no word now. But anyway, they get like a refund from the government in terms of anyone that's on sick.
Look, I'm not 100% sure how that part works. I'm pretty sure that in 99% of the time that it's going to be the state covering, because the employer is only liable to cover the first 2 weeks.
Right.
Unless you have a good employer and they say, no, we'll pay X amount over weeks or months. Otherwise, usually it's left up to the state, where it depends on your income, but actually the higher your income, the bigger the difference is. So the average income 40,000, say, maybe you'll get 25,000.
Okay.
Right, on sick leave, month to month. But as I said, if you're earning 100 to 200,000 crowns, it's not going to get more than 40.
But actually, we're even talking about just people that are employed.
Yes.
What about
Entrepreneurs, they don't get anything.
They don't get anything at all? Yo, so, I mean, that's responsibility, right? But like, imagine like your business, if you're self-employed, runs because you run, right? Because you're living, you're still trading your time. You own your job, yeah? You own your clients, right? You're serving your clients. So if you stop working, you get paid nothing, right? So that's pretty poor to get that, if you know.
So, so we'll go back to the social system. 6 to 12 months, if you're on sick leave, the state will declare you invalid. There's different levels, 1, 2, 3. And depending on the level, you then go from sick leave into an invalid pension, and that's even lower.
It's even lower. Yeah. Wow.
Yeah.
Wow. What we're talking about on average?
Average income. So let's say your average income is the average income 40,000 per month. Sick leave is 25,000. You would probably get, if you're 3rd degree invalids, you might get 20,000 per month. If you're lucky, 18,000. This 3rd degree means you're in a wheelchair. You're not, oh shit, right?
Okay.
It means that you're probably not working for at least a long time. And it's maybe 16,000. And then it's a 1st degree, which is maybe around 12, 15,000 crowns. And that means that, again, these levels, right? Maybe particularly 1st and 2nd, either you have a lot of time off work, but you do not work because you're recovering, or you're incapacitated forever. So your work is limited, right? So you can never go back to work as you're like fully. That's capable. So this is where you get money from the insurance for this reason. And look, it's not going to, depending on your policy, it's not going to set you up for life, right? That's not what it's there for. Just to help you get through these difficult times. Yeah. Right.
Okay. So, but you know, a lot of people don't kind of like come up with this accusation that, oh, what if I don't get paid? You know, like, so there people have had like these kind of stories that the insurance policy doesn't pay them. It's all
you always see the negatives. You also see
things. Is there any common truth to that? Or
I'll explain maybe the procedure when you get a life insurance policy. So you have to fill in a health questionnaire. Right. So if you have any current or maybe more recent health issues, you have to put it there, and maybe sometimes it requires a medical report to show them, right? Sure. So as long as you're honest in this, you're honest in the health questionnaire, and then something happens to you and they see that, yes, you were honest and you were healthy, you cannot get denied.
Right. Because it's based on the medical report issued by the doctor, and not you can talk and get.
So a simple example. I mean, a year ago, I had a bit over a year ago, two clients at the same time. One sprained their ankle, one broke his arm. And he sent me first a picture of his arm in a cast. So, okay, sorry, I hope you're okay. Can you send me the medical report?
Yeah.
So he sends me the medical report. And because he couldn't work basically for 4 weeks, there's daily amounts you get covered that you cannot work, like short term.
Yeah.
And he got, I think, 20 or 21,000 crowns within like 7-8 days.
Wow.
So that basically what he was getting on sick leave plus this gave him a normal salary.
Right.
And that's the kind of the idea behind it.
Beautiful. That's beautiful. And that's why it's really important to have someone advocating on your behalf. Because I think a lot of people, you know, when they get to the bank, for example, right, they are told, oh, you should consider this. And they're like, you know, they're sold the idea of it. But right, the banks, or they're not really going to tell you, they're not really going to be checking up on if your policy is still up to date. Right, because obviously you have to get a pay rise every year.
Yep.
But of course, we might be paying for a premium. We might be paying premiums that were like 5 years ago. Yeah, not actually updated it to kind of relate. So when something bad does happen, we don't get the money that we will get supposed to get. Yeah. Right. So just having someone in your corner that's going to support you on it, right?
Yeah.
And it's also just, and it's kind of one thing I recognize is that the banks, you know, they may not even or even if you go to the provider by yourself, right? They may not expose you to the best, their competitors. Yeah, the better policy for you, you know? So this is why I actually have someone as an intermediary. We're not trying to sell anything right now, but having someone that's an intermediary, can actually benefit you in terms of finding that right policy that helps you, and also checking if it's still relevant, you know, for you.
Yeah, right. Because each company kind of focuses on a different area, right? You have here, if you're young and healthy, Allianz probably has the best price. Let's say if you're a smoker, your price in Allianz goes up and is better with Unique. You know, if you're a professional athlete, maybe Cooperativa is better. So it really depends. And when you're using an intermediary or an advisor, they generally know these things. So it helps you to make that right decision that's for you, for sure. Yeah. So other things, so you have invalidity, that helps. You have permanent injuries. I mean, if you lose a finger, lose an arm, become blind or something, it also leaves you incapacitated as well. So you can get paid based on that. Serious illnesses, cancers or neurological disease, heart disease, which is really, really common these days. And then talking about cancers, it's like 1 in 3 people.
Yeah. 1 in 3 people.
Around almost 1 in 3 people got actually at least once in their life.
Usually. Yeah. And I guess it's quite unfortunate because you don't need it. You may not need it as much in your 20s, but in your 30s, you start to realize, I have some deficiencies here or there, right? But it's in your 40s where maybe you're still kind of healthy, but like one thing leads to another piece, another thing leads to another thing. And then, yes, when the health insurance is really important, like who do you know, or even you, right? Do you have at your disposal extra 500K coming to in your bank account? Most people don't have that. So even for the people that don't have money savings, it's really important you do get it. Those that have more income, they still get it, right? Because they understand the value of it even more. So, it's really kind of advocating for the little man, to actually make sure that
it's safeguarding your lifestyle. Going back to that as well, we were talking about, what were you just talking about? So basically the prices and things like that, right? Or your age, or the thing that really I've come across a lot lately is older people, and not even old, in their 40s, that have now pre-existing illnesses. It's very hard to get them covered for everything. Right. You can get them covered for accidents, because accidents happen and they're out of your control. But if someone has now diabetes, maybe they've had some back problem, or they had some other injuries in the past, some illness, you can't get them covered for everything. And the things that you can kind of get them covered for, the price goes up, right? So first you're older, the price goes higher because you're a bigger risk, right? Then you're throwing on top that you already have some pre-existing or currently illnesses or disabilities. So the price goes up again, or you cannot get covered for these certain things, right? So that means when you come across someone that's young and feels invincible, right? Actually, when you're young and healthy, you can get covered for everything for really cheap.
Yeah, that's incredible. So it's like, and it's quite interesting that, just to put these into perspective. So everyone starts working kind of maximum to when they're 20, right? On kind of the productive years of your life are like 20 to 70, right? So let's have a look at that. If you're in your 40s, that's probably when you're most likely going to start experiencing difficulties and actually need to leverage the life insurance policy. So between 20 and 40, you have 20 years, right? Of course, maybe nothing happened, but you still have like more than half of your life active life, where you is most likely is really high likelihood that you will actually experience something. Yeah. Right. No one gets away with it. Like obviously, part of the time comes back with big force. So why not set yourself up in the front end to protect yourself in the larger end? Now, many people think, I want to live that long. Wow, you're pretty dark. Why are you so depressing? Like, what's going on? Should this be doing longer? Who in your family do you know? Okay, that's probably not a good question to ask, but like, who in your family has not lived up to 70? That's like a good question to ask. Yeah, ask yourself. Of course, there are some minor situations that are unfortunate, but most people live till that age, or even now a little bit longer. So even that productive years, I was saying, from 40 to 70, right? It can be pushing up to 40 to 80, especially with AI, technology, health, all that kind of stuff. People are very health conscious these days. So it's all about trying to prepare rather than to repair, right? And then, you may not even be able to repair in the first place,
Yeah. It comes down to the fact that, and I guess a lot of people think it's a waste of money, right? So what happens if I'm paying this every month and I never use it? I was like, that's amazing. Then what is 3-4% of your income towards your future security, or your now and future security? So it's like, what's the bigger feeling is if you're paying this 1,000 crowns, let's say, give or take, if you have 1,500 crowns on average, 1,500 crowns per month, you're paying this until you're in your 50s or 60s, right? and nothing ever happens. Okay, great. You've had a pretty lucky or good, healthy life. Amazing. Or what happens if you decide, no, it's a waste of money. I'm not going to get the insurance. Then even in your 50s or something happens to you.
Yeah.
And you cannot work.
Yeah.
For, I don't know, months or years or never again.
Right. Yeah.
So how are you going to feel when you knew you had that opportunity when you're younger to put some small percentage of your income towards your insurance?
And even check this out. Like, if you look at the ratios, that 1,000 that you start off with may feel a lot at the beginning, but we all increase our, we all increase our income every year. Like, we're never going to just stay at the bottom, right? And so, like, stay at the same current level for the next 10 years.
Yeah.
So actually, that ratio of 3% is actually just going to go lower and lower and lower, right? So actually, it's pretty important to recognize that kind of like aspect of it.
Yeah. And to realize that, look, yeah, it's called life insurance. We don't need to have it for life, right? You plan on having it for life, but I always tell my clients, maybe the ones that have high income and that makes their policy more expensive. I said, look, the goal here is to cover you in the next 5-10 years in case something happens. If in 10 years you have your financial reserve, you have your passive income, and you don't need it, then we just cancel it. Yeah, it's okay. But it's there to protect you in case something happens. So if you're in a situation where you don't need it, amazing, great. But 99% of people aren't in that.
But let's be real, right? If you can't afford 3 or 5% of your income on something that's going to protect your income, then you have a bigger problem. Why don't you have free? You should have 30% of your income spare every month. So if you don't have that spare, then you have a spending problem then. So you're spending your money on something else other than your life, right?
And this is when you can look at one of our previous podcasts about budgeting.
Yeah,
and this should come into it. Actually, life insurance should be part of your basic needs, right? To cover you just in case, because you can actually think about it right now or answer this question, like how much, or if something were to happen to you today or tomorrow and you don't get any income, how long can you live for?
There you go. That's wealth. Yep, exactly. That's the measurement of wealth. How long can you live without working, and how long it must. So actually, it's probably a good measure to do regularly, just to see where you are. And then once you remember, what can be measured can be tracked. What we tracked can be improved upon. Yeah, so definitely leverage that. But I had a great idea. Like, got to leverage Perplexity. AI is like ChatGPT, but just better, right? Shout out to my friend Gavin. And I was just curious, like, what are the common excuses for not getting life insurance? So I'm probably going to go around through a few of them, right? Through and see what is a good response to that, right? Because a lot of times we throw objections, and it's just because we just don't value, or just try to run away.
Fear is the unknown.
The fear of the unknown, right? So let's talk about it. Let's address it. So one common one is, I'm healthy, so I don't need insurance. Many people believe being healthy means they don't need life insurance. Yeah, but like, okay,
we just talked about it, that's actually the only time you can get covered for everything is when you're healthy. So life insurance is like the only thing that you can get when you don't need it. Once you need it, that's too late.
Yeah. Sheesh. Okay. Wow, that's not. It's too expensive.
Yeah.
People often assume that life insurance is unaffordable. Really?
We just talked. That's 3-5%.
Yeah, if you can't pay for 3 to 5% of your income, then you have other problems.
Yeah.
And you need to address that as soon as possible.
Yeah.
Right. So if you lose the income, you're even in a bigger trouble. So you need to find a way to make that 3%. So, all right.
Yeah.
Okay.
What else we got?
I don't have time. Some individuals claim they're too busy to consider life insurance.
Crazy.
You don't have time? Like, okay, so most people are scrolling through Instagram, Twitter, Facebook for at least an hour per day. That's what the reports say. Or even one worse.
Yeah.
An hour to talk to someone that's more knowledgeable than you to get it sorted, right?
Exactly. It's always seeking someone that's professional and more knowledgeable in that field, It's as simple as that. And it's easy to have bad influences around you.
Yeah.
So, because these are people that don't understand it as well.
Yeah. Yep. And check it out. Here, Czech Republic, all these different services or consultations are free.
Yeah, that's true. That's a good point.
All you have to do is spend 1 hour of your time, right? That you either be in the toilets, doom scrolling, right? To get yourselves protected for kind of like forever life. So guys, check it out. On my employer. So another one is my employer provides life insurance.
Most don't, and actually a very common misconception or misunderstanding is that your employer is covering your health insurance. This is not life insurance.
Health insurance is different from life insurance. Health insurance pays the doctor.
Yeah.
Life insurance pays you.
Yes. So imagine like this, you have your health insurance usually here, there's a pair. That's the most common. You're in a car accident, whatever, you end up in hospital, you need an operation, there's a pair covers that. But then after a couple of days, whatever, they've treated you, boom, they kick you out. The hospital kicks you out, then you're on your own, maybe you cannot work for weeks or months or years, then your life insurance rises into play. And even if it happens in another country, you're still covered.
Wow, amazing. But then also you have to recognize that there are a lot of benefits, a lot of shared services, a lot of expats. They work in shared services and they do provide this benefit. However, the coverage doesn't protect them fully.
Right? It's usually death and invalidity and that's it.
Crazy.
So you won't get the daily amounts. So in case of my client, for example, had broken arm because it's just a minor injury, even though he couldn't work for a month, your company life insurance plan won't cover that.
Yeah. So, yeah. And like, imagine you lose the job. You're no longer covered it at all. And like, we all know that every 3 years, people are changing jobs and some jobs provide this, some don't. So you want to protect yourself forever, no matter what the situation no matter what the situation occurs.
And you know what it is actually, when an employer covers your life insurance, they get tax benefits, but only for death and invalidity.
Yo, check that out. The thing that's
mainly 5-minute injuries sometimes, but that's it. Yeah.
So the thing that's the benefit is actually a benefit to the company, not to you. So think about that.
You can compensate it with, if you have a good like life insurance policy, say with the employer, like the death and invalidity, you have that covered. Then you can have everything else covered, like serious illnesses, the daily injuries, like working capacity, these kind of things you can have covered separately. And then, like you said, if you change jobs, it's really important to then upgrade your other life insurance because you won't be covered for these stuff.
Again, once you're in, you can always change it. Yeah. It's okay. You can actually, once you're in, you can already change it. But if you don't have anything and something happens, you don't, beggars can't be choosers. Right. So we're nearly rounding up, but here's another one. I'll get it once I start a family. So many people wait until they have dependents to purchase life insurance.
Yeah.
How this is out.
Dangerous here.
It's dangerous, right? Because, acquiring a policy earlier can lead to lower premiums.
Yeah.
And ensures that coverage is in place before any potential issues.
Yes, that's exactly. And also, generally when you start a life insurance policy, serious illnesses and diseases take 2-3 months waiting period until you're covered. You're in for that. So then it can be too late for you.
And plus, you want to just really put your hands in the life of put your life in the hands of the government.
Yeah.
Do you know how long they take to do anything? Let's be smart, guys. Let's be smart. Oh, I don't understand life insurance.
Yeah.
Lack of knowledge in today's world is just absolutely fraudulent. It's absolutely crazy. There's so much information. There's all the knowledge in the world. Find someone, just Google it. Literally use ChatGPT or Perplexity AI, and you'll find the knowledge. I can invest my money elsewhere.
Yeah.
What are you investing in?
Yeah.
Most people are investing.
And the first thing that they sacrifice when they cannot work due to illness or injury is their investments because they can't afford it now.
And remember, what we talked about before is, in our previous video, consistent application, positive attitude towards a goal will produce success. If any time you stop the compounding, right, that's what Warren Buffett says, never stop. Well, I think it's Charlie Munger, his business partner, never stop the compounding. If you stop it, you lose the value of the investment. So life insurance helps to protect even your investments.
Yeah.
Think about that.
And I like the quote that we found that regarding life insurance is, I'm not hungry, so I won't buy any food.
That's great. Yeah, no one thinks that way because we all know that we'll be hungry.
Yeah.
We all know that we do get sick.
Yeah, unfortunately, life has different ideas or different outcomes for us that we don't plan. So it's better to be prepared.
And then the last one is I have other financial priorities. Individuals may prioritize other expenses over life insurance, thinking it's not urgent. So your income is not important, I guess. Income protection is probably the most important thing, especially when you don't have savings or some kind of security, because your income is you. And the government forces us to protect our car, right? It forces employees to help pay the doctor, but they don't force you to pay for yourself. So definitely look at your financial, look at your priorities and make sure they're in line so that at least you are protected no matter what happens.
Better to be safe than sorry.
For sure. All right. So guys, thank you for listening to another episode of the Financial Matters podcast. We talked about life insurance and I think it was pretty fun, right?
Yeah, that's good. I think it's an important one because a lot of people just don't understand it and it is important. It doesn't have to be expensive.
Yeah. So thank you for listening. If you do need someone to help you, go find one. There's so many people that can do that, especially in the Czech Republic. It's for free. So don't waste your life or don't miss the opportunity.
So don't take too many risks.
There you go. So thank you for listening and we'll see you for another episode. See you next time.